Again, all eyes on Alphabet. They reported last night. Now, I got to tell you, from my vantage point, I think the company delivered, right? Here are your main key things. For me, what stands out, obviously, is the cloud. The cloud is everything because that's how we kind of judge return on investment. Street was looking for 63%, 82% growth. But moreover, and this might even be even more important, cloud operating margins soared. They're now 35.6%. They were just 21% a year ago. But there's a lot to unpack here. That's why the stock is getting hammered. Luckily, we've got one of the best on the street. I want to bring in Needham Company, their managing director, Laura Martin. And Laura, I know you're maintaining your buy recommendation, your $450 target. So walk us through this, particularly for people who are holding the stock as it continues to get hammered.
Sure. So I think what Wall Street is saying to Alphabet is 82% growth in cloud is great. 24% total growth for one of the biggest companies on earth, great. You're spending too much money. Right. And you're not telling us what the incremental return on capital is. They're under enterprise level margin pressure, not in cloud, but at the enterprise level, their costs are growing, expenses are growing faster than revenue. They've now said they're going to sign up 3 commitments to third parties because they can't keep up with demand. So they're going to go into contingent liability, which is another form of obligation. And of course, they raised the CapEx budget by $15 billion from 90 days ago. Right. So we're going to be at round numbers, $200 billion of CapEx. And revenue's growing, but it isn't growing fast enough to have a positive return on capital for if you're going to raise CapEx $15 billion every 90 days. I think that's what the market's saying with shares down today, despite very strong fundamental performance. So free cash flow negative for these third parties and these other folks, that's a good thing. For Google, obviously, that's another question mark, some doubt. I want to ask you about another area of doubt, Gemini. A lot of grief here. Some major talent is left. The 3.5 Pro has been delayed 3 times, yet they shocked us. 950 million users on this thing. I got to tell you, I was listening to a call from one of the founders of DeepSeek. He thinks that they're going to be a winner. OpenAI and Google, he thinks will win the AI race. Well, I think part of the point I agree with he's making is I don't think there's room for all of the LLMs that are getting funded right now. So I do think there'll be 2 or 3 winners. I think it is a surprise that Google is, introducing low-end models when it's clear the Chinese models should really dominate the low end on cost, and Google should stick to high-end, high-security models, it seems to me. But I do think that Google probably, with its data flow from YouTube, from Waymo, from search, probably has best-in-class ability to update and have the biggest LLM. You're right about turnover, but in fairness, they were the incumbent, right? They invented transformer technology. Right. So, of course, they are the net loser of talent because that's where the talent all started, in a sense.
So I want to switch gears to Meta. You've got a hold on it. Now, they just launched a new campaign, an ad campaign. We're going to play a little snippet of it for a second.
Brace ourselves for what's to come. Some people will have you believe AI will make us less connected, that it's going to leave us behind. We couldn't disagree more. Call us optimists, call us dreamers. Just as we've always done, we're betting on people.
So am I going to wake up tomorrow and find out because of that ad, you lifted your rating to a buy?
No. I don't exactly understand who that commercial is targeted to, maybe consumers, but Wall Street hates FTEs. Like, we hate employees. We want these companies to be using agentic AI to replace FTEs. So this is a bad ad from a Wall Street point of view.
You went to a hold on Apple. Apple, though, in the last few months has made the surprising move. Is it time to reconsider?
So, Apple is the defensive play if you think that generative AI is overhyped or that these hyperscalers will not cut back and be more disciplined about CapEx. So, there's 2 sides to every market, and there are plenty of people who just think there's too much hype around the AI craze, and they're hiding in Apple. Nice, big, liquid name, huge free cash flow, awesome returns on capital, very strong cultural ratings, positive cultural ratings. And we have a new CEO, which is interesting, right? For the first time in 15 years. So all of that makes Apple the one to watch, although my opinion is the reason we have a hold is the strategy of sort of not adopting AI and just hoping that you can remain the gatekeeper to 2 billion consumers. Like, I don't think that's going to work, but they seem to think it will.
Yeah, well, you know what? They've been able to get away with that for a long time. Also, some questions about them maybe having to actually buy a chip company because in-house efforts have been short. I just got 30 seconds, but I have to ask about Amazon because you do have a buy on it. What are you anticipating from when they report next week?
How very worried about the CapEx number. Amazon has consistently reported after Google and raised its CapEx more than Google, which means that will not be good for the stock if it raises CapEx because it's already at 200 billion, so it would go above 210, 220. So that's bad. I really don't like all the money they're spending in the commerce business and the same day delivery business. They're spending a lot of capital having nothing to do with AI. And my opinion is strategy is what you say no to. If AI is going to be this big, spend your money on AI, stop spending it on investing in long-term assets when the discount rate's going through the roof because Amazon's core business might get disintermediated by agents.
Wow. Wow. Lauren, thank you so much. I hope we can get you back on real soon. There's going to be a lot more news out there. Appreciate you. Thank you. All right. See you soon. All right, folks, programming alert for you.